So we all knew this day would come. The Securities and Exchange Commission just released a press statement that blockchain technology, cryptocurrencies, and initial coin offerings are now considered securities, which of course puts them under the jurisdiction of the Securities and Exchange Commission. So let me read to you a little quote from the press release here. The report confirms that issuers of distributed ledger or blockchain technology-based securities must register offers and sales of such securities unless a valid exemption applies. Those participating in unregistered offerings also may be liable for violations of the securities laws. Additionally, securities exchange providing for trading in these securities must register unless they are exempt. The purpose of the registration provisions of the federal securities laws is to ensure that investors are sold investments that include all the proper disclosures and are subject to regulatory scrutiny for investors' protection. So, why is this significant? So for those not familiar with the area of finance, let me explain to you why this is significant, specifically for the cryptocurrencies. It's because they've introduced a way for entrepreneurs to raise capital and essentially finance their ventures through equity in a way that otherwise would be impossible in this country. Because in order for anyone to buy an equity or a venture in a company that isn't publicly traded, you have to be an accredited or sophisticated investor, which of course has definitions under SEC law. So you have to have, according to them, over $1 million of net worth or hundreds of thousands of dollars in annual income. So basically, not you. And why is this? Why is it that the Securities and Exchange Commission is so concerned with micromanaging your finance? Is it because you're just too stupid to handle your own money? I mean, certainly you can't just opt out of the cryptocurrency market or just simply not buy Bitcoin. Now, let's talk about the real reason why this is. The bottom line is, you do not compete with the equity markets of the Fortune 500 companies. You do not compete with U.S. Treasury bills for investor money. I mean, imagine this. Imagine your 401k, instead of being filled with equities in these large Fortune 500s or U.S. Treasury bills. Let's imagine you had a share of your child's private school or your local homeowners association. But no, of course, we can't have that. So I'll go ahead and link to the Steemit article that I wrote about this below. And of course, let me know how much of an asshole I am in the comment section below.